My dear friends, I have said this once, maybe twice, and now I will say it a third time, because this is one of the most important episodes you will watch in your trading career, investment career, cryptocurrency career, maybe YouTube career, maybe life. I hope this episode will stick in your memory because it contains a huge dose of my experience, my failures, my successes, what I have learned, and why I am where I am. At first, you might think you don't want to listen to this, but believe me, it's like a small child getting upset with their father for saying something and being angry at him, only to understand years later that it was the best thing they could have received from life from their father, in terms of words, in terms of learning. I hope you enjoy this episode. If you do, remember to subscribe and I invite you to enjoy the show. And of course, everything I will be telling you today is 100% based on my experience, on the fact that what consumed me, what defeated me, what I had to fight against, what later helped me, and why I am where I am today, precisely based on certain experiences, reflections, and things that I simply went through on my journey. So, my dear friends, let's start with the topic that is most underestimated by all of you, not paid attention to, and you think it doesn't matter at all, that we simply don't need it at all, which is the psychology of trading, the psychology of the crowd. And it's precisely emotions, listen, that will be your greatest enemy. Not only on the path in the futures market or simply day trading, but also on the path of a long-term investor, a person who approaches this market with a long-term perspective, and also just wants, for example, to only hold fear, greed, FOMO, all of this, listen, will lead to totally idiotic decisions that you will make on your path. And of course, what will this road be? End with only losses. And the market, listen, is not a place for emotions, and you must remember, with every order, with every trade, with every purchase you make. And above all, the worst thing you try to do is to rid yourself of emotions. And that is one of the bigger mistakes because unfortunately, a person cannot rid themselves of emotions. So the only thing you can, or rather should do, is to learn to live with these emotions, to learn how and to what you react. What is important, what is less important, what decisions you make driven by certain emotions, and how to turn that to your advantage. Believe me, it can be done, and it can really bring a lot of good in your cryptocurrency journey or simply in the financial markets. And listen, something that helped me become, you could say, a profitable trader, and it's not like I make money month to month, because there are better months, worse months, and months in the negative. I don't even mention weeks or days, because that doesn't matter. For me, what matters is my return on investment on a quarterly and yearly basis. Remember, sometimes, it's just not possible to be a trader who earns month to month throughout their entire life, because such people probably don't exist in this world. And here you need to take one thing into account, which is to learn that every time you open a position, you should already set your mind to, I've lost this money. And it's not about affirming to yourself that you will lose this money, or I don't know. Assuming the position is a loss, but simply in terms of your psychology, clicking buy, sell, whatever, opening this position means that you should no longer attach any emotions to it, or rather succumb to positive or negative emotions. We will also get to that later in today's episode, and this perspective will simply help you maintain your strategy or make good decisions. So, my dear ones, you open a position, the margin invested in this position, for example, $100, that's it. There's no kebab you can buy with that. There's no vacation you can send your mother-in-law on. That money is gone. You no longer think whether you can still recover it or if you've already lost it. It disappears the second you open a trade. And I'm not saying it disappears in the sense that you can't recover it, but you have to think about it. Simply in that way, these are game pieces. These are no longer your money, but rather money spent on purchasing pieces that you will move around the trading board. So, only my dear ones, in a situation where the position is closed, whether by stop loss, take profit, or you close it yourself from the market, then that thought should come back to you. Okay, now a certain number of pawns have appeared on the board, not money. Because whenever you look at a position and you already see those dollars changing there, it's already. Your head is already spinning and you make senseless decisions because you're already spending money that you don't have yet. So, by closing the position, you get the pawns back into the game and decide, what am I going to do with them now? Do I spread them further on the board or do I cash out some and continue with the rest? I play this game. And now the question is, what happens if your stop loss is triggered? Well, nothing, because you immediately considered that money as a loss, so to speak. If your stop loss is triggered, remember, it doesn't mean the trade is bad. It means the trade is just as good as if it had hit your take profit. And now you're wondering, what are you babbling about, Stasiak? Well, I'm saying that a trade stopped out by a stop loss is a good one, because you protected your capital from potential further declines. So just as a winning trade is good, a losing trade is equally good due to capital protection, and most importantly, drawing conclusions from what happened in that position or on the chart. Of course, listen, it's not all that simple and rosy as they say because it's easy to talk to a camera on YouTube, but it's much harder to listen to it later, and in fact, the hardest part is to actually execute it. But these are the basic, simplest elements that we should instill at the beginning of your trading or investment journey so that it will simply be easier, my dear friends, for you to sometimes part with money because yes, at the beginning you will part with money more often and greet it less frequently. But this is just a normal, simple path in life. It's not only in trading, but you have to give something to gain more of it. If I invest 100,000 in investments, now I have to give it up. It might hurt a bit, but I know that over time, this investment of 100,000 over the course of months, weeks, years will simply pay off and I will have that money. For example, more. Of course, my dear friends, over time as you gain more skills, experience, and composure on the chart, you will primarily get to know yourself because trading is about getting to know yourself and trading or many elements in life that you will later use in real life, not just in trading. And of course, later on, you won't have to approach your positions so terribly critically because you will have the experience that allows you to view positions much better. You will be able to step outside yourself, stand aside, and observe what is happening without making hasty, emotional decisions. But now you're probably thinking, well, okay, but it's impossible to reprogram your mind, and so on and so on. My dear friends, everything is possible. It might be impossible to tell your mother-in-law that she has to leave. However, when it comes to trading, it's just a matter of time and nothing else. If today you think that something is difficult, impossible, etc., give yourself time. In fact, in everything in life, when you give yourself time, things suddenly start to come to you. Certain new thoughts. Suddenly you start realizing, okay, this way, that way. You start to understand more. You begin to look at certain matters differently. So it's the same as with a plan for a position. If you don't have a plan for a position, you don't enter. And that's it, period. But also the answer to, well, okay, but it's hard to reprogram your mind is, my dear friends, mainly because you lack experience. You know nothing about this market. You have no clue about trading, about market structures, about how all this works. You think that you watched a few episodes or you think you've made a few trades, seen a few positive badges, and you're the king of trading, actually the best trader in the world. Well, unfortunately, that's not the case, and usually at such a moment, you will lose all your money. So never in your life at the beginning should you invest God knows what kind of money into trading because I can assure you, I can promise you that it will wipe you out. Invest proportionally as much money as you have knowledge. If you have this much knowledge, invest this much money as well. And not like how it looks in this world, unfortunately, in the trading world, which is why probably only a few % of people make money because they have this much knowledge and pain and this much capital, or later this much knowledge and this much and this much capital, because suddenly you get scared and lose your confidence, which unfortunately is a very important factor here. And you have to gain it yourself. No YouTube video will help you with that. I hope that at least a little, but you will definitely have to make the main change yourself. And of course, if you look at the situation and think, but I'm putting very little money into these trades, well, if you have poor money management, poor overall money management, then X. These trades along the way will cause your capital to simply shrink significantly. That's why it's so important to match your money to the level of your skills. Always. Because it's probably so simple that I don't even know why I should explain it or why you should. You shouldn't even be asking about it. If you don't have the skills to parachute jump, you don't jump out of a plane suddenly from 5,000 meters because you'll probably splatter like a pancake on the ground. So, the same applies to trading, the same applies to driving a car, the same applies to many different things. If you can't cook potatoes, you don't go to MasterChef. So, the key to all of this, and there's no doubt about it, is discipline. It's determination. It's consistency. It's sticking to the plan, and it's being humble. If I don't know how to do something, I don't do it. I learn first, then I try, not the other way around. So one of the techniques you can adopt is simply mindfulness, which is conscious, you could say, management of your emotions, because you should not only manage your portfolio and capital, but also your emotions. Not only in trading, but also in life, because where you don't need to waste them, don't waste them, because why would you? So at the moment when you feel that emotions are taking over, you have revenge trading, you start making stupid mistakes. Step aside, walk away from that chart, don't force it, because you'll only lose more. Remind yourself why you are here, maybe recall this episode you are watching, or the rules you set for yourself at the beginning, and return to the start. To the beginning of your journey, because you can't reach the end without having stops along the way, or even sometimes going back because you might lose your way. That's a normal thing. Unless you're a troll from the comments, then surely millions. You're earning right from the start, but those are exceptions, of course. Especially now, my dear friends, when the market is very difficult, very impulsive, volatile, and highly manipulated, because at this moment we have a huge institutional bull market that does with us what it wants, or rather plays soccer with us, and sometimes basketball. So, now this market will definitely be very difficult for newcomers, but it will also be a strong shakeup, after which it will be certainly much easier for you. So, it's not about giving up on learning, trading, etc. now. But if the market is relatively difficult, give yourself looser, easier tasks, approach it more calmly, invest less capital, see how everything looks, and learn from how the market is moving at this moment. Because later, if such a situation repeats, it will be easier for you to understand it and not make the same mistakes. A good option, listen, in such a situation is a kind of journal, trader, or a place where you will write down your emotions that accompanied you in certain market situations or during certain trades. Because later, if you remember, there was a situation very similar to this. You will review your notebook, see that the situation was similar, see which emotions took over, and you will already know how to behave, because life is one big, repeating pattern, and you have to be an idiot to keep doing the same thing, expecting a different result. Don't be idiots, just understand how the world and life work, because trading works the same way. So sometimes, my dear ones, it's good to let go. If something is too difficult, do some backtesting, observe it from the side. And there's nothing wrong with that, because if the market structures and the entire market are at a higher level than you currently are, then step away from the table for a moment. Remember that trading opportunities are daily. Something is happening all the time. Of course, it's known that there are periods like now where for a week we have a stable market, and Bitcoin is actually more stable than Tether, but nevertheless, every train that departs has its successor and another one arrives. Remember that always, when something ends, something else begins. If something moves on, something else will soon arrive. Simply put, but let's now move on to the next important stage, which is diversification and risk management in your portfolios, whether they are investment or trading portfolios. Regarding diversification, as the first point, listen, we should establish one thing, because you hear on my episodes very, very often, DCA, DCA, DCA in, DCA out. What is this about? How to interpret it? Because I have the impression that most of you hear it ACDC, not DCA. So, DCA, which stands for dollar cost averaging, is not something where you have $1,000 and divide it into 3 packages. Buy when the price drops 5%, buy 5%, buy. Then the price suddenly rebounds. You think it's a market reversal, so you buy again, and then it drops again, because that's how the market works. And you're already out of money, you don't have cash for further purchases, so you're forced to sell at a loss, because you'll buy back cheaper, it will grow, and you'll profit, and you keep making the same mistake, doing pointless DCA. So instead of earning from DCA, which is the best investment method, you are losing on it. Why? Firstly, DCA involves dividing your capital, not into 3 batches. I have never been in a situation where I ran out of stablecoins at the end of a bull market. I always end up with more than I had planned, and that's good. Better this way than going all in and praying every morning for a rebound, or at least to break even. My dear friends, no. This kind of DCA, even if you have $1,000, you divide it into 10 parts, calmly into 10 parts, and you determine your most important key zones. And I'm obviously talking here about investing, not trading. And you buy slowly, because you need to understand one important, actually key thing in all of this. Don't be greedy if you have $1,000 to spend on Sonics, and you give 500 because you had it well distributed. DCA, it's tough, so you have 500 left. You'll earn less, but you're safe. Greed will kill your profits. It's always the opposite. If you want more and more, you'll have less and less. If you approach the topic relatively safely, you'll earn more. Simply put, actually the best example of all this is Sonic, where in the videos I often said, do DCA. Even there, $1.70, 40, 30. Of course, I was mocked in the comments under the video, accused of hyping Sonic and so on, that it's already going down, that it won't lift, and that we're at the end. Anyway, don't read those comments, because in the YouTube comments, especially those troll comments, there are people with some total disorders, people who came to this market, bought twice, made a profit, and now consider themselves trading gods. So, of course, constructive criticism is fantastic. However, remember that the most trolls lurk in those comments. Unfortunately, of course, you can read the sentiment from it, so I recommend it, because it has helped me make money more than once, let's say, as I saw what the sentiment was, and it actually helped me make good decisions, but think for yourselves. But getting back to Sonic, what happened, my dear friends, when Sonic was at 30-something cents, at 40 cents, and everyone was actually mocking it, I kept buying it up somewhere. My Discord, the other, where I am with you all the time, was also buying this Sonics. And what happens? The chart suddenly bounced back, it's over 80 cents. And those who were writing, of course, that I don't know shit, that DCA is a scam, that Sonic is a scam, what now? I swear. And whenever I say it's going to go up, don't they buy when it's going down? Whenever I say yes, they do the opposite of what I do and make money. Honestly, I would like to see those magicians. They might be better than David Copperfield. So what? Sonic, my dear friends, did not collapse. People who were on the server made at least 100% from that cola because they bought it. Bought at an amazing price. They can hold it long term because those 40 cents or below 40 cents were totally abstract. Low price, and instead of hearing laughter in the comments, unfortunately, I hear lament. So, that's how it is, my dear friends. Patience. And good DCA, calm. DCA, not throwing away all your money. Remember, to sum up, DCA is not about splitting all your money into two parts. On this peak and on that peak, and I'll sell at this dip. It doesn't work like that. It's about X, dips where you buy. These are really, sometimes I divided my capital into several dozen entries at certain moments. In certain projects because I didn't know what would happen there, so I preferred to just do it by averaging, so distribute it skillfully. Don't go all in with 2 or 3 entries just because someone said so on Instagram. And rather try not to be the hero who is currently visible on the screen. Additionally, my dear ones, you must identify with, or rather not identify, but be aware that there is a very high chance that we will either slowly experience a major correction or perhaps enter a bear market. I don't want to scare you, and I'm not scaring you, and I'm not saying that this will happen. I hope it won't, but you would have to be an ignoramus, and pardon my language, an idiot to think that the chart will keep going up all the time. To never assume that if it goes up, it can't fall. I don't assume that it will fall. That doesn't happen. Markets move in waves. When it goes up, there has to be a correction. When there's a bull market, there has to be a bear market. But no one knows when, because no one is a moon wizard. Well, maybe the bad people from the comments, they know, so ask them. In any case, no one knows, so always assume 2 scenarios. No one will know. If a certain drop that occurs on the chart will be just a correction, because it reached a key level, or if it's already a bear market. So, simply realize profits as well. Purchases that you will be making at this moment, and we have had a bull market since January 2023, so we really have it already 2 years. Think about what you are doing, because the money you allocate for purchases now could be frozen for several years. So don't go all in. Do a gentle DCA, but also DCA out, meaning at the moment when you start having 50-100% profit on a coin, slowly exit by 10-5%, you'll be making money, but you can't be sure what's next, and it's better to earn something than to dream of millions and end up with nothing. Or maybe not even with nothing, because you might not even afford that. Hopefully you'll end up with your hand in your own pocket, and let's hope it's your own. So listen, to avoid such significant losses when we are in a very advanced phase of a bull market, it's worth setting a stop loss even on the spot. That's what I do. I have stop losses set strictly on the spot to stay safe. I have too much money invested in this to end up in the red, so just in case. I am, of course, constantly realizing profits, but I prefer to have my stop loss triggered at my purchase points, where I am very well positioned. These purchases are made rather than ending up proverbially in hot water, and only thanks to this you won't suddenly wake up with a 90% loss, but possibly just a small one, and you will potentially have money for further actions. And believe me, I also made mistakes at the beginning of my journey, and I can tell you that the mistakes I made and the coins I bought, which were at a 90% loss, and I thought that they would eventually recover, are at an even greater loss today. So I kept such coins to remind myself of my mistakes at the beginning of my journey. So, make sure you don't wake up in a bear market, where you'll have 80% of your portfolio in the negative. Make sure to have money to buy and sell during the bull market, because the biggest money is made precisely in the bear market. Unfortunately, in the bull market, only those who know how to take profits, and that's not as simple as it seems, make money. Anyway, moving for a moment to the futures market, it sometimes seems to me that many of you think that a bear market will be a tragedy and that it won't be possible to trade during a bear market. The futures market will be completely destroyed and you will stop operating because there will be nothing to trade on. My dear friends, that's not the case. The worst thing, in fact, is stagnation, which is consolidation, because it's quite narrow to play there. Of course, these are fun games because playing from band to band is quite straightforward, but just as you are excited about your profits in the futures market, in a bull market where you keep buying, everything is rising and you're making a lot of money. Cabbage. Hopefully, it's the same in a bear market. The same situation is in a bear market, the same amount of money earned, just as quickly. What you sell, you earn there, you simply shift the trend, change your market perspective, and instead of catching longs, you just keep catching on every uptick. Shorts. And that's it. It's the same. You make the same amount of money. Of course, it's harder to play, but the principle is the same. So, the fact that we enter a bear market doesn't mean we run away from this market because you still earn the same. You just trade in a completely different direction. So the most important thing that should interest you at this moment is we are in a bull market. We look for longs. We are in a bear market. We look for shorts. We are at the in-laws. We look for exits. And does this mean, my dear friends, that you can't short in a bull market or long in a bear market? After all, you do it all the time. And you probably even hide it from yourselves sometimes, that you trade against the trend. And my dear friends, I'll tell you something nice. There's nothing wrong with it. The only thing that should guide you in all of this is if you're loading shorts in a bull market, they should be quick trades. Snap. Reaction. You made a few percent, you close it because it's an uncertain trade. Similarly, if we have a bear market and you're loading longs, you exit them quickly. You very quickly switch to break even and very quickly take the first take profit. Moreover, when it comes to diversifying your portfolio, don't forget that in terms of investments, it's worth putting money into other markets as well. For example, personally, when I stake my coins, I'm talking about stable coins, or if I have some deposits somewhere, etc., I buy gold with this so-called free money. I buy the SPA 500. You buy. Things that are relatively safe and give you more than just, for example, deposits. The SP 500 goes up by 10-12% annually on average. You can buy ETFs at the bank. You can buy from a broker. So diversify your portfolio into physical investments, non-physical, cryptocurrencies, traditional markets, and other various things. Because no one ever knows what will happen in the markets. Even if you say that something is impossible, remember that it is simply unlikely but not impossible. And my dear friends, with this hopefully positive note, we conclude this episode. If you enjoyed it, of course, give a thumbs up, subscribe, and hit the bell so you don't miss future episodes. I sincerely thank you for your time. I wish you a wonderful weekend, and we'll hear from each other soon. Take care. See you later.